Hey, Mickey.
Hi, Ridal.
Thanks for joining. So, please introduce yourself to the Russian and CIS business communities.
Okay. I'm Mickey Granot. I'm a management consultant. I've been a management consultant for 34 years now, and most of my career I was working with Eli Goldratt, the originator of theory of constraints, as his right-hand man. And 6 years out of these 20 years, I was the CEO of Goldratt Group, responsible for the development of the body of knowledge and for the performance of the company as a whole. And all of my career is about helping companies become much more effective in delivering business results in terms of top-line growth and profitability.
Great, thank you. I knew it was impressive, but once again, when I heard it, I felt proud that I know you. So, in your opinion, the theory of constraint, what differentiates this methodology and approach from the other tools and methodologies?
The key differentiator is the fact that this methodology understands, accepts, and operates under the realization that every result that companies generate is an outcome of a cause and effect logic dependencies, and that these dependencies tend to converge. This enables us to take a system which is very complex, understand it in a very simple way, and find breakthrough solutions through identifying the little causes that are responsible for multiple undesirable effects companies are experiencing.
Great. So from what I hear, you sell it's very systemic and delivers rapid and significant results.
It is very systemic. It looks at a very holistic view of any system. And because of this convergence of causes versus effects companies are experiencing, the solutions developed using theory of constraints do generate a leap in performance for companies in whatever area that we are focusing on. It can be a jump in sales, jump in profitability, and meaningful improvements in other performance indicators which are relevant for the overall performance of the company.
Great. So can you quantify those effects? What are the typical results? I would even say just averages and the maximum results that you got during your project.
I would not share the maximum because no one will believe it, so we'll keep it aside. But there are two experiences I can share. One is an objective one. There is a book published by Professor Victoria Mabin of New Zealand University, researching 86 companies that have implemented theory of constraint solutions, and the average results presented there are ranging between 50% to 600% improvement in key performance indicators of sales, profits, on-time performance, productivity, inventory terms. This is the range of results.
During what period of time?
All of those achieved within the first 12 months of implementation. And on a personal note, I've been able to achieve not far from these results, sometimes better, to my own customers across my 34 years of working with them. Yeah,
so this sounds like something really unbelievable, and I'm not surprised they're telling this is averages. If we're talking about maximums, no one would believe it. But considering this fantastic effects, what stops business communities, businesses, and business owners and investors in businesses from using theory of constraints widely?
Mm-hmm.
Why it's not?
Well, it's what you might call the $1 million question.
It is.
Right?
It is exactly.
And I don't think that no one knows really the answer, but we can speculate about that.
Yeah, it's young, probably, right? Considerably.
Yeah. No. I think that there are a few contributors that can contribute to this phenomena. One is that there is something scary in breakthroughs.
Right.
It's something that people look at it and say,
Especially
no.
managers.
Jumping performance by 50% in any indicator is either impossible or too risky.
Right.
And it may block them from embarking on something like that. It may be also the way that you see practitioners worldwide trying to convince customers to adopt this methodology that may seem to be too dogmatic and too cult-wise to some. The essence, I believe, is not theory of constraints. Theory of constraints is my internal software, is not what I sell to customers. Customers should not be concerned whether they buy theory of constraints or Lean or Six Sigma or any other buzzword that can be interesting or not interesting. They should focus on what is the effect or the result they would like to realize.
Right.
And my focus is on helping customers outperform their own expectations. The tools I'm using are mine. They are not being imposed on my customers.
Yeah, I've on your website, on the very first page, I've seen a slogan, sort of a slogan, immunizing the future. What does it stand for?
Well, what I've learned over the years is that companies are very fragile. Companies are fragile not because of what they do, but because of the environment they operate in. We live in an ever-changing environment. Things constantly become different, whether it is political situation, whether it is economical situation, whether it is natural disasters, whether it is globalization, technology advancement. All of these things are happening all the time around us in an ever-growing pace. And what happens is that most companies are very susceptible to these changes. And it's very much, the effect of these changes on the company's performance is very much dependent on the timing. In a very simple way, if I have two companies which are operating in a similar market, they have about the same level of performance, about the same level of profitability, and just 2 months ago, one of the companies has made a big investment decision and committed the cash and some external sources of funding for this investment, while the other company did not make this commitment, which is a random event. Now, 2 months later, something external happened, some meaningful change in the external environment. The company without the cash is much more vulnerable than the company with the cash at that point of time. And circumstantially, this one can bankrupt, even though they are the same size, the same revenues, the same profit, the same market. This may get bankrupt while the other may survive, which is a circumstantial thing. Our service to customers is to try to build for them what we call business performance buffers. That protect them from that external circumstances effect. In terms of the effect may negatively affect them, but it may not kill them. Okay? So our business performance buffers are measured in the rate of growth. We help our customers grow always faster than the market average rate of growth. Profitability, we help our customers realize profitability which is always higher than the average profitability of the segment they operate in. And cash buffer, so they should have enough buffer of cash that they can use in a rainy day. This is what Immunize the future of the company is.
Fantastic, really interesting. And I know that a lot of other firms and companies are doing the same, starting from private equity firms or investment or banks that have got their own assets. So I know that you and your team is ready to deal the same operational turnarounds. Is it the case, and what are the best segments, what like production or whatever, what are the best segments to target using the theory of constraints on your methodology?
Best is very much dependent on how do you measure best, right?
Yes.
Do you measure best in terms of how fast can we deliver results?
Yes, fast and.
Or do you measure best in how much value can the customer realize?
Yeah, I think
Okay.
both.
Okay. So if you measure best in how faster we can realize or get to breakthrough results,
Yeah.
definitely the segments which are better than the others are segments where there is a relatively straightforward way of creating a market advantage for them.
Mm-hmm. Such as?
Such as B2B producers,
Productions,
yes, such as retail,
retails.
such as B2C producers, such as some of the project type of organizations like MROs or construction companies
Mm-hmm.
or engineering companies and logistical companies like distributors or warehouse services. This is where relatively we have enough experience and know how to generate a meaningful market advantage for them. So it's relatively faster to generate bigger impact on their performance.
Yeah.
But anyone else can do the same. We just have to work harder.
Right. So it's not just the owners of the businesses, but also the general managers of the businesses.
The minute an owner of a company is committed to immunizing his company from the external circumstances, we can help them. It may take 1 year more or 6 months less, but the results will be the same.
Fantastic. Can you share any real life case studies? I mean, really shortly in production and retail. So what was done and what were the results? I mean, in any that come to your mind that you are especially proud of?
Well, there are all kinds of, but I can share an example with a large retailer of men fashion in India that I worked with. That in a span of 6 months from the project beginning, we doubled the profitability from 4% to 8%.
Doubled the profitability for the client.
Yes, from 4%.
For the bottom line, which was proven by the company.
Yeah, it was 4%, it became 8% in 6 months.
In 6 months.
In 6 months. It became 10% after 1 year. And we tenfolded the sales of the company within 4 years.
Multiplied by 10.
By 10.
So how would that? This is fantastic. First of all, what's the
and it
valuation?
was not a small company. Okay, it was a $250 million company when we started.
It's a big business.
Yeah.
So I would assume that the valuation increased proportionally, right?
Disproportionately.
Yeah, in geometric progression, right?
Yes, absolutely. Because also the multiplier changed.
Exactly, multiplier changed because the efficiency.
No, because of the consistent delivery of results,
yes.
and the confidence that these results can consistently continue. So
Yeah,
the market of the investors have had a high level of confidence that not only the company was able to demonstrate exceptional rate of growth and exceptional profitability, but they can sustain it for the foreseeable future.
So, sounds really unbelievable. I'm not surprised you mentioned that in the beginning. So, I mean, you were probably like a god or an angel for the company, isn't it? I mean, what continued? I mean, where are they now? I mean, once after you left.
I have no idea. It's been a few years since we finished, and our purpose in work with the customer is that they sustain their capability by themselves.
Mm-hmm.
So we actually are eager to help them gain the freedom of continuing the pace of growth and profitability without our help.
Got it.
I mean, if we can do that, we live happily.
So what about the second case? So any second case in terms of production or?
I can give you an example of a construction company we worked with that when we started was, this was about a $500 million construction company that was losing about $50 million.
Mm.
Within 1 year, they were making a profit of $50 million. And within the next 3 to 4 years, they've been able to sustain a level of profitability of 10% on sales while growing 30% year on year top line.
Again, sounds like
Which is exceptional for construction to have 10% profitability in a construction company. 4% is considered to be not bad.
so overperforming in both cases, in which significant amount of performance. Not to mention the crisis management.
This is our commitment to our customers, and maybe we should mention that it's not only our commitment, we are willing to put our money where our mouth is, okay?
Success
So
fee, I
our
mean?
business model is mostly based on success. We don't become partners, but our fee is mostly based on delivering the promise, not on promising.
So fantastic. What are the typical approach? What the companies which would like to work with your team shall start with? What is the typical project start approach?
We very much believe that relationships should be based on mutual benefits and on minimized risk for both parties. So we don't like to load companies with too much of consulting burden, and we don't want to make a commitment or get a commitment without both parties feeling very confident that it is likely that the commitment will be realized. And therefore any engagement starts with a relatively quick, we can call it quick and dirty analysis we do with the customer. It's a 1 week engagement in which we interview the key functions of the company, collect data from the company, do an analysis, and we start on a Monday and we end with a workshop with the management team on a Friday. And at the end of this workshop, the management team can decide, and we can decide, that it makes sense to go into implementation together. And even this short phase has a very small commitment fee we charge from our customers, and they only pay for the work we are doing in the condition that both parties agreed to move into implementation.
So it's really win-win. It's even
very low load, very low risk in terms of management time, first and foremost, and in terms of investment monetarily.
Mm-hmm.
And if the company is happy with the results of this analysis, and we are happy that we can deliver what we are committing to, only then there is a fee for our work.
Fantastic. I think this approach has got a lot of prospects in Russian and Eastern Europe reality. So what would you recommend? What would be your words to the businesses of the Russia and Eastern Europe?
I will tell them that I believe in a saying that says, whether you believe it is possible or believe it is not possible, you are right. So I would encourage them to believe it is possible. I would encourage them to believe that what they believe is impossible is actually possible. And that with the right mindset and with the right support, whatever they believe is impossible can become a reality of their business. And we are there to help them do that.
A great exclamation mark at the end of our session. Thanks a lot.
My pleasure.